All right, it's holiday season. Markets are clearly in Christmas mood, so very, very quiet. The Gift Nifty is also indicating that, but there are plenty of stocks to talk about. So let's get straight to it. Sudarshan is joining in first up to tell us about Apollo Tyres and why he's watching that one. Sudarshan, good morning.
Yes, another block deal is on the cards. Apollo Tyres is likely to see a change of hands for 3% equity via block deals today. White Iris Investment, a Warburg Pincus affiliate, has announced this block having size of $100 million and for which the floor price is ₹440 per share, which indicates a 2% discount to yesterday's closing price. The term sheet also indicates an upsize option, and that depends on the demand. Post this share sale, there will be a 90-day lock-in period if White Iris Investment plans to sell further stake. As of September 2023, the holding of White Iris Investment in Apollo Tyres was at 8.04%. Now, talking about the stock returns, in 2023 so far, Apollo Tyres has been up 40%, and that returns have been in line with other tyre companies. In December 2020, White Iris had converted compulsory convertible preference shares into shares at ₹100 each.
All right, the long-awaited block finally takes place later today. Thanks a lot for that, Sudarshan. Well, I'm looking at Vedanta. We're waiting by for the dividend. The dividend has come in at around 11 rupees, and that's better than, the Phillip Capital analyst who had joined us a couple of days back. He was expecting around 7 to around 8 rupees. So in that sense, it's better than expected. The total payout from this particular dividend will be close to 4,089 crore rupees, out of which the promoter entity will get close to around 2,605. The record date will be December 27th. And in fact, if you look at this fiscal so far, they have declared dividend of around 29 rupees 50 paise. But since they're going to be getting the promoter entity, that's Vedanta Resources, will get this money, and they will be able to service part of their debt, because 2,600 crores, well, that amounts to roughly around $320 million. They had to, service that debt of around $1.2 billion odd. So they've managed to do part of that, which is pretty good news. I expect the stock to open up in the green, though it's seen a big run in the last few days as well. Well, let's go across to Mangalam to tell us about Devyani as well as All Cargo. Mangalam.
Well, for Devyani, they've gone shopping, and this time around they've forayed into the Thailand QSR space by acquiring Restaurant Development Company. This enables them to buy, 274 KFC restaurants in Thailand to a partnership in which Devyani will hold 51% and the remaining will be held by Temasek itself. The total deal value is close to around 1,070 odd crores, of which 340 crores will be given by Devyani. Temasek will give around 330 odd crores. Local debt will be around 380 crores, for which Devyani will be giving a corporate guarantee. What this does to their overall line-by-line consolidated revenue, 35 to 40% increase out there. But if, one takes account of the minority interest, then the overall addition to their revenue will be 14 to 19%. While it is a value accretive deal and I expect the stock to be in the green, a lot of the brokers are worried about the company, looking outside of India for growth opportunities itself, and whether this will, lead to a spate of acquisitions abroad or not. So that is something we have to watch out for. For All Cargo, acquisitions are galore. They've bought about 51% stake in ECU Line Middle East for about 14 odd crores. They've also bought 14% stake in Eurocenter FZCO for about 14 odd crores as well. This will increase their overall operations. And their other arm, which is All Cargo Gati, the board will meet on 21st December to consider a fundraise. So all those stocks will be on our radar.
All right, thanks a lot, Mangalam, for that. Let's hop across to Abhishek now. He's tracking Kaynes Technologies. Let's find out why. Abhishek, over to you.
Well, Sonia, sources tell CNBC-TV18 that Kaynes has launched a QIP. The amount is about 1,400 crores. The issue price is about 2,424 per share. Now, remember that this is at a discount of 1.1% to SEBI floor price and around 6.9% discount to closing price on BSE that you had yesterday. Dilution is about 9.9% stake over here. The lockup for promoters is about 90 days, and BRLM, or book running lead managers to the issue, is Access Capital, DAM Capital, IFL Securities as well as Nomura. In another announcement that Kaynes has done, they will acquire Digicom Electronics Incorporation. The consideration which will be paid is $2.5 million for that. Back to you.
Okay, Abhishek, thanks very much for that. More stocks in focus, KPI Green and PNC Infrastructure. Vivek has got details. Vivek, hi, morning.
Well, good morning. That's right. One more fundraise, KPI Green Energy. Companies looking to raise funds via the QIP route. looking to raise up to 300 crore, 150 crore base size, another 150 crore of an upsize option. The dilution is close to 6.74% of the pre-issue outstanding share capital if you take into account the upsize option. QIP indicative price is at 1,183 rupees a share. Why is the company raising funds? This is number one, to part finance capex as far as one particular solar power project in Gujarat is concerned, and the other is for general corporate purposes. The second stock that we are talking about today is PNC Infra. The company has emerged as the lowest bidder. This is for a hybrid annuity model project. This is in Madhya Pradesh Road Development Corporation. The project bid cost that the company had the lowest bid for is close to 1,174 crore. Positive news as far as PNC is concerned.
Okay, all right. Thanks a lot for that, Vivek. Well, I'm looking at JTL Industries, and if you look at it in the last 3 months, the stock was around 250 rupees. Then it corrected all the way to around 200 rupees, and there was a large trade that took place out there, with the promoter entity went ahead and bought close to around 1%. This was just 2 weeks or so ago. So now it's back close to around that 52-week high, just a few percentage points shy of that. The big news coming in last evening was that there was a board meeting, and they have approved issue of securities via the preferential route, and they're issuing 3 crore shares. Out of the 3 crore shares, 2 crore shares will be issued to the promoter entity, 1 crore will be to the non-promoter entity. What stands out is the price that they're going to be doing this preferential at, 270 rupees per share, which is more than a 10% premium in comparison to yesterday's close price. Now, the total amount that they'll raise via this preferential issue will be 810 crores, which means that the dilution will be around 15%. They've also approved a QIP amounting to around 500 crore rupees, and this money will be used to expand capacity. They're looking to expand capacity in Maharashtra, and they have announced a big mega project of around 1,200 crores. Or expect the stock to open up in the green. Remember, it's a smaller peer in comparison to APL Apollo Tubes, but it trades at a sharp discount out there. So let's see whether or not the street is willing to re-rate this one, but it should open up well in the green. Going back to Sonal, she's here to tell us about India Glycols. Sonal?
Good morning, Nigel. Where the company is in focus because they have been allocated quantities to supply ethanol to different companies, and this will be grain-based ethanol. Contracts are coming in from HPCL, BPCL, IOCL. There's Reliance Industries and Nayara Energy as well. So it is a total contract amounting to 1164 crore rupees. The OMCs have given a contract of 896 crore rupees, and all companies have given a contract of around 268 crore rupees. And this is for the ethanol period of 1st November 2023 till 31st October 2024. Important because there have been some on and off with sugarcane based ethanol. So grain based is something which is gaining a lot of traction, and this is what we are seeing with India Glycols today.
Okay, thanks a lot for that. Let's also find out what's happening in the world of crude and how you should be approaching it this morning. Manisha is here to give us the latest. Manisha, over to you.
Well, thank you for that. We're looking at a 3% of a jump in crude prices in the overnight market. This is in reaction to the U.S. announcing 10-nation Red Sea coalition against the Houthi attacks on commercial tankers. Now, we have a lot of oil companies and tanker companies which have paused travel through the Red Sea. Let me remind you that 15% of the world shipping traffic transits via Suez Canal. So either we're looking at a pause, or many of these are going to go via Cape of Good Hope, which is a longer route. So that is what has led to premium building up in case of the crude oil prices. In addition to that, it also is Russia announcing 50,000 barrels per day of additional export cuts for the month of December. There is price increase as well coming in for the Asian market, and all that seems to be supporting prices at this point.
Okay, all right. Thanks a lot for that, Manisha. Well, let's do a quick recap of all the stocks we just discussed. Stocks with positive news flow include Vedanta, Devyani, All Cargo Logistics, Kaynes Tech, we have PNC Infra, JTL Industries, and India Glycol. While stocks with negative news flow, they include Apollo Tyres, KPI Green Energy, and OMCs.
All right.
Okay, we'll take a quick commercial break here. We'll come back. Amnish Agarwal of Prabhudas Limited will join in with some fundamental stock check. We'll also connect with the management of G Shipping and the global shipping story very much coming into sharp focus again. Once again, stay with us.